All right, let's talk about the first step of hitting your first $10,000 a month day trading 1 hour a day. And that is you need to know what to trade. This is going to be one of the most critical ones and the one that can really affect how long it takes for you to start seeing results. Now let's start with the basic concept of trading. All we're doing as traders is we're placing calculated bets on the direction of price. So we're going to use different strategies to try to anticipate where price is likely to go, whether it's likely to go up, or whether it's likely to go down. Now, if we want to make money as the price goes up, that is called going long. If we want to make money as the price goes down, that is called going short. And you can make money either way. Now, let's talk about the different things you can actually trade, meaning that you can buy and sell. Most people are going to start with stocks, right? As one of the most popular things to buy and sell. Most people know Tesla, Amazon, Apple. You essentially just own a small piece of a company. Now, this is great for long-term investing if you want to grow your wealth over time. When it comes to day trading, it's probably one of the slowest things you can get into. You will quickly realize that it's going to take you a very long time to actually make money unless you have hundreds of thousands, if not millions, to start with. So for me, if you're a beginner trader, stocks is definitely not the way to go. Plus, you need at least $25,000 to start if you want to be a day trader. So for most beginners, out of the question. Then we have options. This is where people usually go from stocks looking for leverage, meaning looking to be able to make more money with the capital that we have. Personally, that was the exact path that I took getting started. I started with stocks, quickly realized it's going to be too slow, moved to options. Options is great. I'm not here to tell you can't make money there. There's people that make a lot of money here, but it's definitely very complex. I can tell you out of all the instruments I'm going to cover here, it will be the most difficult one to master and the one that is going to take you the longest. I work with a lot of people that come from options and they're surprised how much simpler the system is as opposed to what they're doing. You have time decay, you have the Greeks, you have so many variables that you have to nail, not just the direction of price. Therefore, most beginners just get absolutely crushed and lose their money. So in my opinion, there's easier ways to make money. Then we have crypto. Some people love it, some people hate it. Personally, I talk to a lot of people. This is the one place that I've seen most people lose a ton of money in scams, in fake brokerages, all kinds of Ponzi schemes here going on. What I tell people, you gotta be very careful. Don't put any money that you're not willing to lose. I've had people come to me after losing hundreds of thousands on scams like this. So the promise of making fast, easy money sounds great, but it's also unregulated and it's the Wild West. So don't recommend it. We're going to have better ways of doing it. Then we'll have Forex. Very similar. It's one of the most popular markets as well. A lot of people like it because it's 24 hours. However, same scenario. A lot of the brokers are overseas. They're unregulated. I've talked to a lot of people also who lost their savings, putting their money into a broker that disappeared overnight. And I actually have a lot of people that come to me just because they want to trade something safe and they want to be able to sleep at night knowing that their money is still going to be there tomorrow. So again, I'm not here to tell you that you can make money with any of this. There's just pros and cons to everything. Now, what I'm going to be trading here is actually futures. This was not the first thing that I started trading. I started with stocks, went to options, went to crypto, and eventually landed on futures. I wish I came there sooner, but I just didn't know it existed. So what exactly are futures and why are they so amazing? So let's talk about that. All that futures is a digital contract that allows traders to place bets on the price of different assets like gold, crude oil, indices like the NASDAQ or the S&P 500. And so, for example, let's say that you wanted to make money on the price of crude oil. You believe that it's going to go up for whatever reason. Now, how complicated would it be to try to buy 1,000 barrels of oil to then resell them? That will be very complicated for most people. It's not doable. Now, you could also just go and buy a digital contract, kind of like buying a stock that allows you to bet on the price of oil. So you buy it, price goes up, you sell it, you make money. You never had to own the actual oil. So it just makes it very easy to place bets without having to trade the actual asset. We're not going to be trading commodities or anything like that. Just an example. What we're going to be trading is called the S&P 500. Now, if you don't know what the S&P 500 is, all it is an index that tracks the price of the 500 largest companies in the United States. Companies like Apple, Microsoft, Tesla, Amazon, all these big companies that you probably know about. Now, instead of us trying to trade each individual company, we're going to be trading one thing and one thing only, the S&P 500. That way the process is very simplified, very easy to do, and very time efficient. So why do I like the S&P 500? Why not anything else? First of all, it's actually very predictable, very manageable, very easy to follow. You can actually get started with very little money. Remember how you need 25K to get started day trading stocks? Well, in the future space, you actually don't need that. You could actually start with a few $100s. I will recommend a little bit more than that, but just to show that you can actually start with a little bit of money. You can make money on the way down, meaning that you can go short as prices go down without restrictions. With other instruments, it becomes a little more complicated. So for us, we can make money whether the price is going up, whether the price is going down. I actually love making money as prices go down. And lastly, one of the biggest reasons that we trade the S&P 500 futures is that it offers leverage trading. That means that with a smaller amount of money, you could actually make bigger profits, which is one of the reasons people like options, except that this is going to be a lot simpler without all the unnecessary complexity from options. All we're trying to decide here is whether the price is going up, whether it's going down. We're going to place the bet, and we have the leverage to make more money with less capital. Okay, I'm not going to bore you to death about S&P 500 futures, but I will give you just what you need to know in order to understand the instrument. Let's talk about how price moves. Essentially, price on the S&P 500 is going to move in ticks and points. 1 point on the S&P 500 is 4 ticks, kind of like $1 to a quarter. $1 is 4 quarters. Same ratio, right? For example, this is what price will look like on a price chart. And so you can see that price is going from 37.11 to 37.12, 37.12 to 37.13. Those are 1 point increments. 11, 12, 13, 14, and so on and so on. And then within each point, there's going to be 4 ticks. Again, like 4 quarters to $1. So from 37.11 to 37.12, there's going to be 1 tick, 2 ticks, 3 ticks, 4 ticks. And you see the half of a point will be 0.5, kind of like 50 cents. Same scenario here. Now, 1 point, meaning if price went from 37.11 to 37.12, that will be worth $50. Each increment is going to be $50 no matter what. If we go from 37.11 to 37.12, 1 tick here will be $12.50. 2 ticks, meaning halfway, will be $25, and so on and so on. Now, when it comes to futures, we're not going to be buying shares like in stocks. We're going to be buying contracts. So you can buy 1 contract, 2 contracts, 100 contracts. And there's a term that you're going to be hearing that is margin. Margin, all it is the money required to trade 1 contract. And that is going to be set by your brokerage, meaning where you deposit your money. Now with NinjaTrader, which is the brokerage that I use, that most of my clients use, the requirement to trade 1 contract on the S&P 500 is $500. So if you want to trade 5 contracts, you need 5 times that amount of money, which will be $2,500. And then we'll talk a little bit later about how contracts affect how much money you make. Now, when it comes to the S&P 500, technically it's open 23 hours a day. However, the best hours are going to be stock market hours, 9:30 a.m. to 4 p.m. Eastern time. Can you trade overnight? Can you trade at night, early morning? Absolutely. However, most of the movement is going to happen in these 8 hours. Now, last thing that I wanted to cover here is something that even if you've been trading for a while, you may not know. Most people are going to be trading time charts, right? So this is just different ways of displaying price on a chart. Most people are going to be using 1 minute chart, 5 minute charts, 50-minute charts, and so on and so on. And this is what it looks like. You have like green and red candles. Green means up, red means down. You may have seen this at some point in your life if you're new, and if you've been trading, of course, you know what I'm talking about. We're going to be doing things slightly different. First, I don't use candles. I think things can be a little bit simpler. And second, you'll notice I don't use color either on the candles. Once you've been trading for a while, you know that green and red have very powerful psychological impact. Because of the associations that we have with the colors, winning and losing, I've learned that if we remove that, you can make this significantly easier to execute. Small detail, big impact.